Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of LME 3-month copper and aluminium. I'll start with LME 3-month copper. A third bullish white soldier yesterday, but also an unusual key reversal up, and finally the trigger to a possible new large pattern. I had earlier this week said, and I quote, the market was still capped by two overhead congestion bands, the first between 81.77 to 82.39 and the second between 83.50 to 84.24. In between them we have the late August high at 83.18. These are beginning to look quite tough resistances. End of quote. Well, the market sliced up through the 81.77 to 82.39 resistance as if it wasn't there, closing clear above it. For what it is worth, this is now support. We now have the 83.50 to 84.24 band overhead, with the following three resistances beyond that. The 50% Fibonacci line of the October 2020 to March 2022 move at 85.56. The April 2012 high at 86.65, and a slowly declining long moving average beyond that, currently 87.70. This action now brings into focus the action since June to date as a possible big W pattern. Now, the big W pattern is a derivation of the double bottom, but on a much larger scale. Thus, a primary target X would be in the 90.90 area, and a secondary harder to reach target X1 would be in the 97.50 area. It'll be interesting to see how this will now develop. Well, so far today, what looks like a bullish opening white Mariposa that this time sliced up through the overhead congestion between 83.50 to 84.24. Again, much like it was not there. The rise has stopped at the 50% Fibonacci line of the October 20 to March 22 move at 85.56, but prices are still above the congestion band, which is now becoming support. LME 3-month aluminium. A test back down to the diamond pattern below yesterday with a long-legged indecisive spinning top that dropped all the way down to the combination of the slowly declining short-medium moving average, currently at 22.67, and the October 2018 high, also at 22.67. However, the drop was held there, and in fact, the market still closed over and outside the diamond pattern, despite the penetration. Overhead, the move was capped in part by the flatlining medium moving average, currently 23.40, but more by the June 2018 high at 23.53. This pushback into the diamond, but failure to close within it, somewhat alleviates the idea that this original break above the diamond made last week and this is a false break. It's more of a true break. I had previously indicated potential targets for this diamond pattern on the upside. Thus, a primary target X would be in the 25.60 area, with a secondary harder to reach target X1 in the 26.52 area. We now wait and see if this will become a reality. So far today, well, another early and really good attempt higher, up through the medium moving average and the June 2018 high plus the high of the diamond at 24.20, and now up to testing the lesser Fibonacci line at 24.41. With what looks on the surface of it, it might be a bullish opening long white Mariposa. Beyond that, we have congestion at 25.08 and then in various bandings from 25.63 up to 26.75. Thank you for listening. This short version broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.